Well. That is another trade completed, another trade for the books, and a US 30 session finished. You guys know that I trade a swing trading strategy and a day trading strategy. The swing trading strategy, I've covered that multiple times in the channel by now, and I thought I wanted to give you some context and information about my day trading strategy. So all these things that you see on the chart here, as an example, the term rate acceptance, fair value gap threshold, rate rejection break, that's a bit of what I want to talk about today and give you a little bit of information on my strategy. More specifically, I'm going to be breaking down the trade that I took today, which netted just over 2R on US 30. This is, by the way, the 1 minute chart. And the first thing that you need to understand about my strategy, my day trading strategy, is that I trade this strategy on the NAS 100 and US 30 only. Okay, now I'm currently working on testing other markets such as gold, but as of now all the information that I've gathered is on these two markets, and I trade them from 8 a.m. till 11 a.m. so I have roughly a 3-hour window where I'm going to be looking to execute trades. Now 8 a.m. to 11 a.m. New York time zone. Okay, so if you look at my chart over here, it is set to New York. And those are these vertical lines that you can see over here, which start at 8 and end at 11. Now, if we zoom into the chart a bit, the very first thing that you need to understand about my process is that I always start my analysis on the daily, and I use these three specific time frames: the daily, the 30-minute, and the 1 minute. And before we get into the trade breakdown, I want to give you a little bit of information about what I try to do with each time frame. So if we go over here, on the daily, my goal, and you can see that in red, is to denote 2 daily levels. Now, levels is a very subjective concept, and in order to, provide you with a better definition, I've decided to describe it as such. For me, a level is any swing high or swing low, a fair value gap closure, or a naked wick. That is what I understand in terms of levels and what I use the term for. So every time you hear me refer to the word level, just know that it means one of these three things and one of these three things only, and not anything else. Okay, so as I said, my goal on the daily chart is to denote 2 levels. Okay, and that's exactly 2, not 3, not 1. I'm only looking for 2. And what I'm looking for more often than not is the previous daily candle high and low, or levels that I think have a high degree of probability of being hit during my 3-hour time window. Okay, keep in mind that I'm only trading 3 hours a day, so I'm not gonna come and say, hey, what about this swing high over here? Well, yes, it is a swing high, but is it likely to be tapped during my 3-hour window? That's the question, and the answer is, in this case, clearly not. So with that out of the way, once I have my daily levels, which in this case for today's session, and remember that I do this every single day, where I remove everything that's on my chart and prepare for the new trading day, these were the 2 selected levels that I thought were relevant and had somewhat of a decent probability of being hit. So with that said, I jump into the 30-minute, and you can see that the daily levels in my chart are always red. This is the previous daily candle low and the previous daily candle high, which coincidentally lines up with ATR, which is a huge area of potential business, but we're going to be talking about that a bit later. Now, once I've done that and I have my daily levels down, I look for the 30-minute levels. And once again, when I came to my chart today, the market was here with this bearish candle that you see. So what did I do? I look for any level. Remember, swing high, swing lows, naked wicks, and fair value gap closures. So let's go through them. You can see that in this case, I had a level here, which is a swing high, and you can see that that had some importance in today's price action, because that is actually what I targeted today, but we're going to be covering that later. I had a swing low here, and I had a fair value gap closure here. You can see this. Now, I label this as a previous structure because it's easier for me, but if you want to call this a fair value gap, which is correct, so if we do this and we drag this across, this would be your fair value gap. But for me, I'm only interested in the closure of it, which is a naked wick at the same time. So you can see how how the concepts slowly but surely start to, well, work together very precisely. Now, remember, this is the fair value gap closure level. This is a swing low, swing high, and that's about it, if I'm not mistaken. Those were the levels. Now, what is this fair value gap threshold? Well, in order to understand this, you need to first understand what happened during the time window that I was looking at the chart and what made me go long. Now, the answer is simple, right? I didn't want to do any business if the market was staying below this green line or above this green line. But once the market started, in this case, moving lower and traded below this green line, my first initial thought is simple, right? If we can get below the fair value gap closure, break below and pull back to it with space on the 1 minute, which we're going to be covering in a second, then I'm going to be looking to go short to the next level, which in my case, yes, you have the daily level here, but that would be, in my opinion, too unrealistic to expect, and I would have more than likely targeted this low instead. Okay, so with that said, you have to remember that if the market were to have pushed lower through this fair value gap closure level and accepted below it, I would have gone short. But let's zoom into the 1 minute, because this is where we see everything in a bit more detail, right? This is the fair value gap closure. The market started moving. This is when I come to the charts and the market started moving lower. Now, remember, every time the market is within these green lines, I'm not doing anything. But what happened here is that the market actually traded lower, traded into the fair value gap closure, right? Which we rejected. Not only that, but we also cleared a swing low, as you can see over here. Okay, if we go to the 30-minute, you will probably see it better, but this is a swing low. I mean, it's obvious we have a swing in and swing out. So what do we know about this? Well, stop losses and sell stops are resting below this level. So it is a great area to be looking to do business at. Now, why is it a great area? It's simple. The order book is being cleared. Everyone that was long has been getting stopped out below this low, and shorts have been initiated. So it is one of those few moments during my session where I need to be very focused and paying close attention to what is actually happening in the charts. So we see this, the market moves lower. Now, if we don't close below and accept below, I cannot go short. But what I can do is, if we do break below the swing low, close above, which we do here, then I can start looking for longs. Now, I don't just go long because we traded below a swing low and closed above it on the 1 minute, right? This is not a trade I would take. Like, I wouldn't have said, okay, time to go long here and place my stop loss here, which in hindsight obviously would have been great, but I'm not that good. So what I do is simple. I look at the fair value gap threshold on the 30-minute, which in this case is this naked wick here. So what I'm saying is, as soon as the market has traded below this swing low here on the left-hand side, and let me actually grab a different tool to showcase this swing low on the left-hand side, as soon as we traded below it, I'm waiting for the market to close above this. Before this happens, whatever happens between here and here, I don't know. I'm not going to be looking to do business. But if I see that we've tried to push lower, broken down a swing low, closed the fair value gap, and closed above the fair value gap threshold here, and that is a concept that I might want to discuss in a bit more depth in a future video, then I'm really interested in going long. Now, how did I get long and why? Well, this is the fair value gap threshold level that I spoke about, and as soon as the market closed above it and pulled back to it with space, then I'm interested in going long, pretty much. Okay, and this happens exactly here, right? So we encounter the level here. There's some initial rejection. Then we push through with this candle. Now, that to me is not enough. I want to see 2 or more consecutive candles closing above this line and pulling back to space into a naked wick before I consider a trade. So that happens exactly with this next push up. As you can see, the market pushes up again. This time we close multiple times in a row above the fair value gap threshold. And once again, for me and for my strategy, it needs to be 2 candles or more. Okay, so the moment I see that, I'm asking myself, where can I enter long to target, well, the next potential area of trouble? And the next potential area of trouble was, in my opinion, clearly this high here, which I'm going to be discussing in a little bit more depth later. Okay, so we closed above it multiple times, and I just simply entered here at the naked wick. It is a rounded retest. We pull back to the naked wick with space, which is absolutely crucial. And if it had already been tested, then I wouldn't have not picked this area to go long from. Okay, so I entered my trade here. My stop loss, if you've been watching my channel for a while, you know that I don't place my stop loss below swing lows or swing highs. In general, below or above any swing. And the reason why is because everybody has them there, and I don't want to do what everybody else is doing, so I use the thrust candle concept. Now, the thrust candle in this particular price action segment was clearly here, okay, and let me show you why. This is the moment, and I don't know what this is doing. Let me get rid of this. There we go. This candle right here is the candle that closed above this minor structural point. So, logically speaking, my stop loss should have been there, which is below this low, which in this case would have survived by nothing less than a pip, but it would have survived. But what I did is go one more candle back because I thought that looked a bit too tight for my liking, and placed below this low. Now you might think, if you're not used to my material, that is a bit random. Why not below the swings? Blah blah blah. Well, as I just mentioned, having your stop loss above and below swings is a recipe for seeing the market do this, which is you see the market perch the low, you get stopped out, people start selling, and then this happens. So, because I don't want to do that, I use the thrust candle principle instead. So, very simple. I entered my position on the 1 minute because I use the 1 minute for execution, and I targeted, well, the next area of trouble on the 30 minute, because the thought process behind the strategy is simple, and we're going to get in more details in a second, but I scale down. I work with the daily 2 levels. I then jump into the 30 minute, which is where I do 90% of my analysis, which is determining the areas I want to do business at, which once again are levels, and I've given you the definition for levels: naked wicks, fair value gap closures, and swing highs and swing lows. So when the market reaches any of these points, I'm paying attention. If the market is ranging within these areas, then I'm not doing anything. And sometimes, even if the market is reaching into any of these levels, I'm not taking any trade because it doesn't set up the way that I want to set up. So for me, it was logical to target this level over here as my take profit area, which is the next potential area of trouble on the 30 minutes. So even though I'm executing my trade on the 1 minute, I'm using the 30 minute to tell me where do I need to target, pretty much. I entered the trade. It went into drawdown, which is very, very normal. Nothing to be concerned about here. And then the market, with a nice push, reached into my area. Now, would I have been mad if the market kept on going higher? The answer is no. Because most often than not, I will be looking to take another trade up off this line. This would be a typical rate acceptance trade, as you can see over here, which is to say the market breaks above this level in the 1 minute. I wait for it to pull back with space, which is to say I need to see multiple candles closing above it. And then I look once again to enter the trade at the line, in line with potentially a naked wick, as you can see here, with my stop below the thrust and expecting the market to push into the next 30-minute daily level. That's sort of how I break the market down when I'm looking to day trade the Nasdaq and the US 30. Now, you might ask, why are you trading Nasdaq and US 30? And the answer is simple. Trading is already very hard, so there's no point in making it harder for yourself. And what I do is simple. I'm trading these two markets because, one, it's very cheap for me to do so. I don't pay commissions and my spreads are very low. And two, there is a lot of volume when I'm trading, which is between 8 and 11. Now, if we zoom out again and go back a little bit over here, there is this pattern that I want to speak about a bit, because it is the trade that I took pretty much. Okay, so let me break this down for you in a second. So once again, imagine this is the 30-minute chart. A level would be here, which is a swing low, and this is exactly the pattern that I traded today, which is the market breaks below the swing low but doesn't close below it and accept. So what I'm doing is I'm looking for the fair value gap threshold level, which in this case would have been here. The moment we close above this fair value gap threshold level, and we do so with multiple candles, once again, multiple being 2 or more, and we pull back, in this case, what happened is we pulled back to it with space, which is important, into a naked wick, once again, would look something like this, then that is my pattern. That is my trigger point. And this is just one of the 4 that I trade for my day trading strategy, but this is the one that presented itself today. So this is the one that I needed to execute on. And you can see that what eventually ended up happening is the market failed me. I think it went a little bit into drawdown to begin with, right? So let me illustrate this for you. The market then went into a little bit of drawdown. My stop loss was sitting, remember, not at the swing low, but at a thrust candle here. And my target was the next visible 30-minute daily level, which is what ended up, not 30-minute daily level, but 30-minute intraday level, which is what ended up happening, which would look something like this over here, which is where, once again, as you could see in the beginning of the clip, I took profit. So yeah, that is the trade, and you can see that even though, if you look at this objectively, this is a very, very messy, how would I describe this? This is a very messy trading range where there's really no direction and nothing is going on. You still had an opportunity today, at least for the way that I traded. Now, I get trades almost every day, but not always. It's not guaranteed. And you can see that what I do as soon as I get into my charts is label the type of setup that I expect from the level, right? As you can see in this green upper line, I expect the rate acceptance to occur. So if I see that, then I'm going to be ready, and I'm not going to be second guessing myself because I prepared for that specifically. On the other hand, I expected a potential rate rejection break with a previous structure fill, which is once again the fair value gap closure that I showcased on the 30-minute time frame over here being visible. So yeah, that is the trade that I took today. We can talk about trade management a bit because I think it's quite important and a lot of people struggle with that. And what I eventually did is simple. So the moment we closed above this minor swing, my stop loss went below the candle that closed above this minor swing, which in this case would have been here. You can see that I'm always using the thrust candle principle to, one, enter my trades and know where my stop loss needs to go, and number two, to manage my trade once I'm actually in the trade. So I place my stop loss initially there, and really everything else was smooth sailing because no more structure developed. As you can see, this was just a few minutes of continuous bullish movement. So my stop loss went from being here, which is the original, to being below this thrust candle once the candle closed above this minor swing structure. Now, arguably, you could have trail your stop loss again as we closed above this minor swing high here, and place your stop loss below here, which wouldn't have changed the outcome of the trade in this case because it went straight into take profit. So actually, if you guys want, what I could do is upload the entire raw session or any upcoming session, because I tend to record my trading sessions from 8 a.m. to 11 a.m. So that would be a 3-hour video. And if you guys are interested in seeing my process from the moment I get into the charts, to checking the news, to seeing the overnight action, to preparing my levels, to determining which setups I expect at each level, and to actually executing and taking the trades, then you're free to let me know. If this video performs well and you guys tell me in the comments that you would like to see me upload a raw trading session from my intraday trading, then I will gladly do so. So hopefully this was helpful and educational, and I'll see you in a future upload.